Becoming a high demand trader. This is Isaiah. Welcome, high demand. So we're back to another mini series of School of Indicators, and today we're going to be talking about the moving averages. I really like this indicator too. So what we're going to do is talk about how we're going to implement this moving average, uh, implement multiple moving averages into our trading just to help us improve and enhance our trading. So how to use moving averages. So moving averages can be used for multiple reasons. All right, so one, you can use moving averages to trade entry and exit points. Two, use moving averages for a trend filter. And we'll talk about a trend filter near the end of this episode. Three, you can use moving averages to quickly spot trends, the different directions, if it's a trend, if it's a sideways market, if it's up or down. And we'll go into that and we'll talk about how to use that. But first, I'm going to walk you guys how to set this up, walk you guys through this. How to set up the moving average indicators on MT4. So tap the screen to add indicator. Okay, we're going to tap the screen. Boop. Click on indicators. Boop. Click on the main window. Okay, boop. Scroll down and find moving averages. Okay, so we're looking under trend and moving average. Alright, so it's going to tell us to set up the moving average. So let's set up the moving average properties. Set that up. So the first moving average that we're going to set up is a 10 MA. So where the period is going to be 10, shift 0, simple, close, and the style is going to be use this one with whatever bullish candlestick color you have. That's what I tend to do with the 10 moving average. And after you set that up, it should look like this. So you see how it's the same color as my bullish candlestick. So this is basically the moving average of the last 10 candlesticks. And as you can see, it's in a downwards market right here. Boom. And the moving averages tells you too. Because the candlesticks are below this moving average, the 10 moving average. Alright, so the second one we're going to set up is the 25 MA. So you're going to do the same thing. You're going to click add another indicator, click on the main window, click on moving average, and then it's going to show this property page right here. And you're going to put 25, 0, same thing, and this style is whatever color scheme that you want it to be. Mine's is red. So it's going to look like this. Alright, and I'm going to show you guys a quick strategy of what you can use to enter the market based off of these crossovers from these moving averages. So the 25 MA is the last 25 candlesticks, and their moving averages combined. Okay. So how to trade with moving averages. So first you're going to select the asset to trade. Trading platform is going to have assets, and you're going to select them. Like if you're in Forex, like Euro USD, whatever. And the time frame that you're going to use is going to be the 1 hour. For these moving average, we're going to use the time frame of the 1 hour time frame to calculate our entries and exit points. And this is basically the strategy. If the 10 MA crosses the 25 MA going upwards, that is the indication that the market is going up from that point. If the 10 MA crosses the 25 MA going downwards, that's an indication that the market is going down from that point. So let's see how this visually looks. I'm going to open a trading view and we're going to do some live examples. Alright, and we're going to look under the moving averages to how we use them to enter trades and exit trades, and how it quickly spot a trend. So let's do that. All right. So we're in a live market right now. So let's set up the indicators on the trading view. You guys should already have it set up on your phone. It's the same thing. So trading view, we're looking for moving averages. We're going to click that once, and then we're going to click it twice so we can have two. We're going to set it up. So the first one is 10. And this style is going to be this. And the second one is going to be 25. And this style is going to be red. Alright. And we have to be in the 1 hour time frame. And we're going to look how we can enter the market and exit the market using our moving averages. So I'm just in a random place in the market, and I'm going to give you guys examples of what you guys can look for using these moving averages. So my blue MA is my 10, and my red MA is my 25. And this is a perfect example right here. So you can't just use one indicator by itself to determine if you're going to get into a trade. You're going to use a full technical analysis, and the indicator is going to enhance your trading. It's going to give you another confirmation of why that trend is going to continue. So the moving averages, for example, it's when the market pushes the candlesticks above the moving average, and it forces the 10 MA to cross the 25 MA going upwards. Let's look at this. Let's zoom in. Boom. So when this happens, that could be a possible entry point. That could be a possible entry point. We're looking at this cross. So if we entered when this crossed, we would enter here, and we would exit when this crosses over going down. Following it, boom. Right here. So if we measure this, this is a trade solely based off the moving average. This trade itself gave us 231 pips. That's a nice trade. And that's based off the moving average. That indicator itself right here. This is just a strategy. We have the 10 MA crossing over the 25 MA, letting us know that upward trend is happening right now. And let's say we wasn't just focused on the moving average, but we was looking at a possible, reversal right here that's happening by using a trend line and a support line. So now you see why that looks like a better entry now. And then that crossover right there after this jump gave us our entry. And let's say we was looking for a place to exit. Let's say we just holding this trade all the way until it crosses over again. Now it's 231 pips. Okay, let's look for another trade. That's just one example right here. This is a perfect example. Let's just go a little bit further behind that. When this, so this looks like a very strong trend right here. Let's just start from right here. Boom. So as we see, the market followed this trend all the way up here to this high point, and we're looking for a point to sell at. So if we followed this market, and let's say we had some type of resistance line right here, and we're like, okay, we want to sell, but we want like multiple confirmations to sell. So it broke this trend line right here. We always want to wait for the retest. If it breaks a support and resistance or a trend line, it's gonna come back and retest it. It comes back and retests it multiple times right here, and that looks like our true confirmation to sell right here. You could have sold right here. You could have had an entry using your moving averages from the crossover, or you could have like really waited for a nice confirmation from the market, letting you know that that downwards trend is really about to happen once the retest comes and the market makes. So this is a high point, this is a low point, and this is the lower high point right there, and it comes down. That's how the market moves. Higher high. Boom. Make sure that y'all can really see that. A lower low. Okay. I'm just gonna say low point because it's not a lower low. And this is a lower high. That lower high gives us that confirmation of a downwards trend. We have the trend break, moving averages crossed over, and our lower high point. That's our key for our entry right there. Boom. We already having nice trades just based off the moving average and our fundamentals. Support and resistance lines and trend lines are the fundamentals. So you know your SNRs, your trend lines and counter trend lines. You don't need nothing else. But you use your indicators to enhance your trading, give you more confidence, and allow you to see the market in different perspectives at the same time. So as you can see, we got multiple confirmations to enter. We could have been aggressive and entered right here, or we could have waited for the trend line to break right here. And it bounced off the resistance line as well. You know, so that's two different trades right there based off the moving average. So this spot right here where the moving average is crossing downwards. Let me delete these for y'all so you can pay. Boom. Let me zoom in. Right here. The moving average is going downwards and is crossing the blue one is crossing the 25 going downwards. So that's a signal to sell. And it does go down, but that signal to sell, you have to understand what the market is doing. You have to apply your fundamentals as well. If the market is in a sideways movement like this, then you have to apply like, okay, it just bounced off the support line, so selling isn't a good idea yet. Let's wait for a trend line break or whatever. You know, it does go down, but what happens is it comes up and shoots up and tests this resistance line. So what we're looking for is a breakout. So we're gonna use other fundamentals that we know in our forex knowledge to apply to make this trade. So we wouldn't want to just make trades based off the moving average. We want to use the moving average to enhance our trading, to give us a confirmation of why we should be trading in a certain trend. So yeah, so this is how you use it for entries right here. So we have multiple examples. So let's just continue with the lesson so you guys can further your knowledge. All right. So what we have next? We have trend filters. Trend filters. So trend filters, I like trend filters. It allows you to be more disciplined with your trades. They're for long positions. Long positions are only allowed to be open if the 50-day moving average is above the 100-day moving average. So if you're doing swing trades or position trades, this will allow you to make sure that you don't place too many low quality trades. This will make it so the market will always be in your favor because you're trading with the trend. And I'll show you an example of this in the next slide. So this ensures that we don't put on trades counter to the dominant trend. It reduces the number of trades and lessen the risk of getting caught in the whipsaw markets. So that means it reduces the chance of the risk of getting caught in like a market that looks like it's going up, but it's not going up. So you wait until the moving average crosses over. So I'll show you an example. So let's add these real quick to our charts. So I wouldn't have the 10 MA and the 25 MA included with this trend filter. This trend filter is separate. This trend filter is only for long positions. That 25 and 10 MA strategy is for entries in the 1 hour chart only. Alright, so you will clear your indicators, your moving averages, and you will add this to your chart just to test out the trend filter. So let's get into this. Alright. Moving average. You will add this. Have your period be 50. So that means the last 50 candlesticks, we're getting the moving average of all the last 50 candlesticks. And then we're adding another MA. And this one will be 100. We're getting the last 100 candlesticks, and we're getting the moving average of that. And let's see how this looks like. Let's go over the rules. Let's clear. Let's not even clear this. Let's just remove the indicators. Let's add new indicators. Stochastics. Oh, not the stochastics. I'm tripping. Moving average. 1, 2. Okay, so let's do the same thing. The 50 is going to be the bullish color. The 100 is going to be the red once again. Actually, I don't like that red. Alright, so if we're doing long, this is for the day chart only. We only want to use the trend filter for long-term positions in the day chart only. So this is what we're doing right now. Trend filtering. Trend filtering. Alright. Let's actually go here. Copy paste all this just to help us understand what we're doing. Alright. Hi the man, teammate. So this is just gonna help us understand what we're doing right now. Oh damn. That does not look pretty at all. Okay. Okay. Maybe. There we go. That looks a little better. Okay. So long positions are only allowed to be open if the 50-day moving average is above the 100-day moving average and vice versa. So long positions means I'm buying. So where am I buying? Right here. Let's move this. And let's look. Why am I buying? Because my 50-day moving average is above my 100-day moving average. So that means I can look to open long-term buy positions. And as you can see, this forms a formation. Well, not really a signal, but it reverses. The market comes back up, and I already have a signal of my trend filter is allowing me to trade this market. It breaks a counter trend line. Let's say this is the top. Boom. Okay, right here. We know we're looking to buy, but what's our confirmations? The crossover allows us to trade this because our trend filter is allowing us to trade this. If it happened over here, we can't look for the buy. We have to wait for the trend filter. That saved us. Because if we would have brought up here, the market would have came up and we would have held on to that trade, because our TP is up here somewhere and the market comes back down and we probably got out of that trade or whatever. So since we waited for the trend filter to help us understand that the market wasn't ready, we have to wait till the crossover about right here, and then we look for another confirmation, which is this counter trend line break. Not just the counter trend line break, the retest. It makes a higher low point. Let me just make sure that you guys wait. Yeah, make sure you guys peep that. Higher low. Alright, so we have a higher low. And I say a higher low because this is the low right here. This is the low. The market breaks the counter trend line, closes above this low right here. If you put your stop loss 10 pips below this low, this wouldn't have hit your stop loss. So you would have been smooth for that long-term swing going up. So this is the low. We're looking for the higher low. The higher low happens. We could enter in this candlestick at any time. That was our confirmation. two though. Okay, let's look somewhere else. This is a trend filter too. So let's look for a a bearish sale. Oh yeah, let's go way up here. Yep. Trend filter right here. So let's just set that obvious trend line up. Boom. Let's say we set that trend line up. So what we're looking for is confirmations to sell. We know we want to sell, but when? When do we sell? We're looking for the confirmations. We follow that trend filter, and let's see what happens. Let's look for our confirmations. Trend line break. Boom. Trend line break. So the trend line breaks, but we still need to follow our trend filter. We're not allowed to trade this yet. So what are we looking for? The crossover right here from our trend filter. For long-term positions, you are only allowed to be open if the 50-day moving average is above the 100-day moving average and vice versa. So we're not looking for long positions. We're looking for selling positions, shorting positions. So selling equals shorting. Just to make sure you guys understand the terminology. So that means the 50-day moving average, which is my blue line, needs to be below the red 100-day moving average. And so now that it crosses over, I can look to sell this long term. And let's see what happens. I have double confirmation. Moving average, my trend filter, and the counter trend line is broken. Well, the trend line. Boom. I could have easily... Okay, so that's my confirmation to look for a sale. But to actually enter the market, I can use the 1 hour chart. Let's say I was using that 1 hour chart. Well, let me go back, find where I was. Then let me stay up here. Boom. 1 hour. Yeah, I gotta really find myself. See, that's how far you can really get zoomed in the market. I need to like zoom in right here. There you go. Zoom in, go into the 1 hour chart, zoom out. Dang, they got me in the same spot. Alright, we're just gonna stay in the day. Cause this thing tripping. Alright. But my point was that to enter the actual trade, you can use the 1 hour chart. You will go into the 1 hour chart, look for a trend line break like this, a counter trend line break, and when that 1 hour chart breaks, and retest, that'll be your entry, somewhere right here for a long-term trade. And that's how you'll find the entry. You can use the 25 moving average and the 10 moving average strategy to enter the market. And you could have followed the market all the way down here and made a whole bunch of money just because you was following the trend filter to protect you and make high probability trades, because that's the goal of the indicators. The indicators are helpful to predict high probability trades. The moving averages are indicators, and we can use multiple indicators to give us multiple confirmations to predict a trend. We follow the trend, collect the pips, make an income. all through equity management and a high demand trading mentality, understanding why we're entering these trades, because we're following rules like these, trend filtering. So if you're a scalper, you don't need to follow the trend filtering rule. If you're swing trading and position trading, then you may want to apply this and implement this into your trading just to improve or enhance your trading if you like. You know, it's all up to you to add on top of your trading rules. But yeah, I feel like that was a smooth example of trend filtering. I just recently learned about this as well, and I'm learning to apply this and implement this into my trading to allow me to produce high quality signals as well. So yeah, so we just enter. So we already went over adding this into our charts. Yeah. So that was pretty much it for the moving averages. Um, let's quickly just go over what we learned. So using moving averages to enter your trades or to exit your trades as well, using the 25 and the 10 MAs in the 1 hour chart. You'll want to use that in the 1 hour chart for entering the market and exiting the market. And then trend filtering is for the day chart. This is for the day chart right here. I just want to make sure you guys got this locked in. 1 hour chart. Boom. And you can use these moving averages to quickly spot the trends based off which where the candlesticks are closed above. If the candlesticks are above the 10 moving average, then it's an upwards trend. If it's below the 10 moving average, then it's a bearish trend, a downwards trend. So yeah, I really enjoy using the moving averages just to help my trading. I don't use them by itself. I use them to add on to my knowledge of Forex to help me have a better understanding of where the market is going, long term and short term, and to give me that confidence to hold on to a trade even if it's going against me because I know long term is going in my favor. But yeah, all right. So you guys got another indicator locked in. Message me if you guys have any other recommendations of what I should be covering as so far as like indicators, because I'm probably just going to cover Bollinger Bands next, and then I'm pretty much done with indicators unless you guys have any ones that you guys want to learn. All right, good luck. Hi, man.